Today is Saturday, April 6th, and this is my weekly review. So thank you for watching. This last week, I'm going to review the week, which was, pretty crazy because there's not a lot of news. It's really quiet, and the Fed heads were speaking hawkishly, which kind of affected the markets. You're looking at a daily chart of the Nasdaq on Friday. It was up 199 points or 1.24% on lower volume. The big day last week was Thursday. I've got to get to the 5-minute chart. As we can see, it gapped higher. It was been gapping higher in the morning and selling off, but this is machine trading on Thursday afternoon. I was traveling, so my stocks were all doing great. And then I didn't look at the phone for, an hour and a half or so. And when I reached my destination, I looked down and said, holy moly, what's going on here? And it just looked like the algos grabbed a headline. I don't know which one. It was maybe a Fed head speaking or geopolitical headline. But anyway, the sell programs turned on, and the machine just sold off into the close, which formed an inverted hammer candle on the daily chart. But thank goodness the machines don't have memories, because I guess the fund managers came in on Friday and said there's some decent stocks here to buy at their moving averages. So you can see that inverted hammer candle there on Thursday, and then an inside day on Friday. So the low here is still below the 21, even though it closed above. It's 21. I think it's just a tick below. This is a Nasdaq now. I'm going to get to the S&P in a minute. Yeah, it closed just a tick below the 10 and 0.2% above the 21, but the low is well below the 21. And I think everybody was expecting the Nasdaq to just drop down to the 50 on Friday, but it didn't. It gapped up and had an inside day. So but this bar here is not going to be ignored. It was a nasty reversal with a close, around the 34 EMA. It was a little reminiscent of March 8th, where we had this, new highs and then a reversal and this inverted hammer candle on the lows. So the NASDAQ, this is a weekly review, so I got to get to the weeklies. The last week of the first quarter saw some weakness here. And then the first week of the second quarter, we saw even more selling. So, with taxes coming up, and if you got your tax bill, you can understand why people are selling their stock. But if this is a weekly, and if you could see these three legs down and then the rally and then a power trend, and if you look here, it's been down 4 of the last 5 weeks, and just kind of marking time and going sideways. If I look at the daily chart, right around that 16 level, 16,000, it's still, comfortably above it, 248 points above it. But this, sell off peak to trough from the high of 16,538 to the low of April 4th, which is that Thursday of 16,046, is less than 3%. It's like 2.9% peak to trough correction. I wouldn't call it a correction, just a little pullback, but it didn't reach the 50. All right. I'm going to go to the RSP, which is the S&P without the market cap weight, which is, Apple and Microsoft and Meta and Amazon, kind of tilt the scales on this. So, I got it from my friend Mike Webster, who likes to use the equal weight index, but it's, the same thing, below the 21. And you could see the action there was no escaping the action on Thursday, because the machines were just selling off. So, nobody escaped that. And if you held stocks through that, then, you felt the damage and the carnage. For me, it prompted me to make a couple of adjustments in my, I had to make some adjustments in my portfolio last week. I didn't want to, but I had to. And you can see this is below the 21 as well. The low is below the 21, even though it did tick up above. And this is 0.3% above the 21, 2.3% above the 50 here, this red line. So anyway, I don't trade indexes, I trade stocks, and we have the good, the bad, and the ugly this week. I'm going to start with the ugly and then go to the bad, and then there's a lot more good than bad, I believe. But I did mention that I had to part ways with my ELF. I mean, This is where good entry points, really make a difference. If you have a good strong entry point here on ELF around that 33, around the breakout here, and you rode this thing and you sat through this base, this is just a little blip on the radar. And if it comes down to the 200 and makes a base, you're fine. But if you bought at this breakout around that 150 level, now you're sweating it because you're watching your profits, dwindle, and you don't want to turn into losses. And that's where I am. I, just had to take profits and move on. There's too many other good stocks, but you got to acknowledge this earnings line, this green line here. This thing is going straight up. So maybe that, the chart precedes the news, so maybe there's slower growth here, and maybe it's not worth 220. Maybe it's going to be worth 150. That's what investors are willing to pay. You can see the big pink volume bars here. So yeah, it's been heavy selling in the ELF, and I doubt if it's going to grow at 85% sales in perpetuity, but that's due to slow down. But it's still, if you're have a thesis, this is the new Estee Lauder of this generation, and you want to hold it for 10 years and find out, well, I respect that as well. But I'm a stock trader, and you can see the growth is expected to slow here. Will it or not? I don't know. I mean, they're killing it on TikTok, but time will tell. And, we just kind of have to wait for their earnings report, because this company didn't come out and say something after Ulta Beauty gave their caution warning. Anyway, that's it for ELF. Another one that I had to part with is AMD. This one pulled back to the 50. I was expecting it to find support. Same with ELF. I'm going to go back to ELF here. This pulled back to the 50. And I thought, oh, it's going to get support and bounce off the 50, but no, it didn't. It fell right through. And you could see the moving averages curling down, the shorter term moving averages. And same with AMD. Pulled back to the 50 and squatted there for a lot longer than ELF did, but then gave it up. So, below the 50, I just had to sell because I can always buy it back. And I don't know how low this is going to go. It's a stock that I like, but that's kind of like just one of my rules. So anyway, AMD, I think is going to be fine. But yeah, just slice its 50. And this earnings, needs to start turning up as well. So I'm interested in what they have to say. I believe they report the end of this month. Yeah, not just a few weeks here. So we'll hear from Lisa Su at AMD. But for now, I mean, below the 50, maybe it's just going to form a base here. So that's one of the ugly ones. Not as ugly as this insurance company that I put on my leading stock list, and this thing just fell out last week on Monday, weakness, Tuesday, man, nearly a 9% drop, sliced to 50, then followed through on Wednesday, man, another 3%. Thursday, like everybody else, they've felt the carnage of the program selling, and this one was down 1.7%. Finally, a little teeny dead cat bounce on Friday. Anyway, that one is adios, muchachos. And of course, Tesla is just in a downtrend. And there's nothing to say here. I mean, it's just in a downtrend, and every time it rallies up to a moving average, it gets pushed down. So Tesla looks ugly, and that's why it's part of the good, the bad, and the ugly. Apple's pretty similar to Tesla. Every time it tries to rally up to moving average, it gets pushed down. So that one's in timeout in the doghouse for now. We got to hear earnings on May 2nd. So we'll see what they have to say. I think they're a little bit behind in the AI arms race. And the last one of the ugly crowd is Lululemon. The retail group has been having some trouble. I really don't know why, because the economy's strong, the job report's strong, but I guess the consumer apparel is slowing because this thing has competition, and it sliced its 200 and just followed through every day this week. So congratulations to the shorts there on Lululemon. Just a lot of the retail stocks were down, except for the retail restaurant. I'm not going to go through all of them. The hotel leisure, the booking stocks in the restaurants are doing well, but most of these clothing, retail apparel, and shoes are showing weakness here. It's Abercrombie and Fitch is now going sideways after a big move. All right, We're going to go to the bad. NVIDIA, not that bad, right? It's down 2 weeks in a row after being up 11 weeks. So, and you can see this earnings line is heading straight due north. NVIDIA, yeah, like I said, it was up 11 straight weeks and then pull back the last week of the first quarter and the first week of the second quarter. Um, it's had a big move, so it's just, resting. It's not that bad. Like I said, this is not that bad. It did close right at its 21 though. I mean, right at its 21. So we'll see what happens next week with NVIDIA. I'm kind of thinking that some buyers are going to step in here pretty soon. And it just seems like it's just kind of trading around that 900, that psychological around 900 number that Jesse Livermore talked about so much. So we'll see with the NVIDIA. Another one that's showing weakness, it was bad, is SMCI. It closed below the 21, which I don't like. This is, pretty precarious for me. I was about ready to take it off my leading stock list, but it's still, if you look at the weekly chart, and this is a weekly review, it's still flagging, and you got to give this one some room because it's a pretty wild trader, but you can see the pull and then this little flag here. So it still looks okay to me. Just, like I said, there's no news here. There's no contracts. There's no, new products. There's no raised guidance. There's nothing going on with Supermicro. And so it's twisting in the wind here with, Fed had comments about interest rates. And so we're going to have to hear some good earnings on the April 30th from Supermicro for this to gain traction and attack these new highs at 1,229. But if I go to the weekly, it'll give us, it's 23% off of its high. And so that's a pretty strong pullback for Supermicro. So that one is kind of in timeout as well. NVO, this is bad too. This one's been down 4 weeks in a row. Just pulled back to its 50, filled this gap here. It's a gappy chart because it's an ADR and it trades overseas. But you can see this earnings line going straight due north. And these guys are in for the long haul. They're building and buying manufacturing plants because they know as much as they manufacture, they can sell. But I just wanted to point out it's down 4 weeks in a row. Not a real big pullback. It's only 9% off its high, but it has not pulled back 4 weeks in a row since 2018, October of 2018. It has pulled back like 3 weeks, and that's usually when it forms a base. Here it's 5 out of 6 weeks it's down, formed a base. Right here it's down 3 weeks and just had this cup with handle base. Here it's down 5 out of 6 weeks and it just formed a base. So perhaps this is just forming a base here prior to their next earnings report when I'm sure they're going to crush it. But this is the first pullback to the 50 since the breakout from that 105 area. And that usually is a guess. I would expect next week, some buyers will step in. I'm not saying it's going to make new highs, but probably take it back to the 130 level and form a little base here before their May 2nd earnings report. But for now, it's in timeout. For me, I mean, I own it, I'm holding it, but I'm not buying it until it shows some signs of life. I'm not adding to it. It's already a pretty big position. Uber is another one that pulled back to its 50. It's in the bad category because I have a lot of good stocks making new highs. This is not making new highs. It's pulling back to the 50 for the first time, just like NVO since a breakout. And you can see it's just forming this base here. It's only 6% off its high, so that's not bad for being in the bad category. Uber looks pretty fine to me. Deckers, these two that entered the S&P have just suffered. I don't know that they've not done well since entering the S&P 500. This is Deckers pulling back to the 50 for the first time since the breakout here. I wouldn't call that a base. But it did break out following earnings and now it's pulled back to the 50 and had a little dead cat bounce on Friday. But that they're going to have to report earnings. When is it? May 23rd. Deckers has just been a huge winner for a long period of time. And but the retail apparel has been pretty sluggish recently. I think the XRT has been one of the most sluggish sectors in 2024, and especially recently. And that's the last one is CrowdStrike. So the CrowdStrike's in the bad category. It closed below its 50 on Friday. It's been marking time. I've had it on my ready list because I'm expecting a bounce off the 50, but these things are not bouncing. So, buyers will come back eventually, but you can see there it's 0.5% below its 50. If I zoom in there, you can see 0.5% below the 50. Not the end of the world, but it's just kind of marking time after this big move from that 160 breakout run up to what, 365. So yeah, 315, not bad for a CrowdStrike. It's a weekly review, so we'll look at the weekly, 13.6% off of its high, and you can see it's just kind of marking time going sideways. And they don't report earnings for a while, May 30th. So that's the bad. So now I'm going to get to the good. These are the stocks on our leading stock list that I like. And we're seeing a lot of this with the leading stocks. With they run up and then they form this like shelf type pattern here. And we're seeing a lot of this, and then bouncing to new highs. And this is Meta. I would still say this is, I would consider this a risky buy point here. But if the 523, I don't know, maybe that's another add-on buy point for Meta. It's a really strong stock. It's got the growth profile that we look for. You can see it's had a nice move. And maybe I was thinking it was going to do something like this, but it's got other ideas as it made new highs last week. So Meta, definitely one of the good stocks. Amazon as well, just making new highs. Kind of the same thing there as it made that high at 180, then went sideways for a little bit, marking some time. It's about a 5 or 6 week, these little flat bases that these, they're making. It's almost like, they're grinding higher, and you could see the earnings lines on these AI stocks. I mean, I believe we're at the beginning of a new bull market with AI as the thrust, the thesis, the fuel for the fire, and Amazon is right in the middle of that, and Meta as well. So these stocks, I believe NVDA are going to have a long multi-year expansion, but that's just me, that's my theory, but I'm going to stick to it. Just as GE, they've had a spinoff. They've kind of parted out their leaner is meaner, right? So they've gotten a little leaner, and this thing is going parabolic. I don't know how long it can continue this trend. You can see that the new CEO has definitely been a big boon to this company. The last base, though, was back here in the end of 2023, so it's just gone parabolic ever since this rally here, and definitely one of the leading stocks of this new rally since the follow-through day in November 1. So GE, definitely one of the good stocks making new highs. Eaton, another one of the leading stocks at MC stock charts. And similar to GE, these are data center plays that they're built out. And you could see the earnings line just going due north. And the greatest driver of stock appreciation is, earnings growth. And these guys have it, GE and Eaton and Meta and Amazon. And the next one I'm going to show is Vertiv. Their latest earnings report wasn't all that great, but we're going to hear again from them on April 24th. But you can see once again, it's made this high and then it's kind of going, flat around that 80 level, and probably going to attack that 100 mark here pretty soon. You can see the last base was back here in September, and it's just been going parabolic. The earnings line is going up, but not like some of these other ones that I'm going to show. Spotify had a great week. This is one of the best traders. I went large in this one. Is now I kind of traded ELF and AMD for this one. And once again, you're seeing this flat base type of pattern here at that 272 level. Just kind of went flat. Webby calls it a shelf, which is fine. And this thing just blasted off higher with volume last week, even when the machines were selling on Thursday. This one just kind of went down a little bit. And then they came in Friday and said, hey, we're going to resume buying this one. and it was up nearly 5% on Friday. So Spotify, one of the big winners last week. HubSpot as well. This is on our ready list. One of our winning stocks from last week. You can see the earnings line due north. You can see the cup-shaped pattern, now flat base. Just broke out of the flat base with volume last week, nearly 7%, closed at 670. But you know, the rumors and the gossip and the chatter is that Google wants to buy them, and I don't really like buying stocks just based on M&A. So for me, you know, I'm going to get to that in a minute because Shockwave was bought out and it didn't really move because the move already happened. So for me, if I own this and it made that big spike, I would just sell it and move on. But that's me, you know, so people can do whatever they want. Netflix is another one of the leading stocks here. You know, kind of that similar pattern, you know, gapped up on earnings and it's just gone kind of sideways from that 624 high and now, you know, breaking higher at 636. You can see it's making new highs and just kind of grinding higher. Netflix, another one of the leading stocks, and they're going to report earnings here pretty soon, April 18th. So it's right around the corner here. Another one that I like a lot is the Micron, and the reason why is this big base here and finally starting to move higher. That's the monthly chart. Here's your weekly that shows this big base. Now, the thing I like about Micron is what I said, you know, earlier is the earnings drive the stock price. And there you can see the earnings line heading straight up and the stock is heading straight up, made a new high last week, pulled back, you know, the last couple of sessions, you know, allowing the moving averages to catch up. But Micron, another winning stock. So if you're picking stocks, that is definitely one to watch. Tidewater, I have to include some oil and gas stocks reluctantly, but I'll get to that in a minute. Tidewater is the leading stock of this oil and gas field services area, and it just made new highs after breaking out of this base here. And surfing its moving averages like Kelly Slater, you can see the base here. Now it's up, what, how many weeks in a row? 3, 4, 5, yeah, about 11 weeks. What does it think? It's NVDA or something? Anyway, very strong stock, Tidewater. And that's why it's part of our leading stock list. Caterpillar, I know people can't believe Caterpillar is doing so well, but this is a data center play. Once again, this is up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks in a row. It's got this hammer candle closing near the highs on last week. Let me see, the 91% of the range, weekly range, and you could see the earnings line going straight north. This is great that Market Surge included that because it just shows how earnings is correlated to stock price. EME, another one that not many people talk about, but this is one of the leading groups and a leading stock and a leading group. And you can see it's got the David Ryan Ants indicator here, very strong stock, MCore, building maintenance. And, you know, we can see it's got, you know, double-digit growth, and it's been up, I don't know how many weeks in a row, kind of like these other ones that I'm showing. I mean, this is like shooting fish in a barrel, you know, just buy and hold on. They go up every week, and what's not to like? Anyway, that's the end of my good stocks, and I'm going to go to some of our top trades and MC stock charts last week. Like I said, reluctantly, these miners and oil and gas, you can't ignore them. You know, this is Alcoa, and we had this, you can see it's pretty obvious here, this nice symmetrical cup-shaped pattern and broke out. I believe we had this back here. Yeah, it just had a nice week. So it's a weekly review. Let's go to the weekly. Yeah, it's up 8% last week. That's a good trade in my book. But you know, what are you going to do? Other people are talking about 100% moves. I don't play that game. I'll take an 8% move every time. But you know, I had to mention some of these other ones. These miners are just going parabolic. This is Southern Copper, and you can see the breakout from the base and moving higher. I just, you know, I'm not a metal and mining and oil and gas commodity guy. I'm just not. That's fine for people who are. I mean, if that's your jam, that's great. It's just something that I have not been able to gravitate towards. Maybe you know, I'll learn to adopt and adapt and buy these things, but I'm kind of reluctant to buy them. Another one that did well for us last week was Devon, as it, you know, broke through the You can see the the RS line breaking above the moving averages, and you can see these moving averages. The shorter term moving averages broke through the longer term moving averages. So and this one had a very good week. I don't know how many traded it, but yeah, 6%. I'll take that. 6-8% moves. Those are nice moves, I think. Seadrill is another one. Oil and gas is a driller, obviously. Seadrill, and this one was up, nearly 6% last week. You can see pretty pronounced consolidation base there, and broke higher last week. So congrats if you picked that one up. ConocoPhillips was another one. Yeah, you can sense the oil and gas theme. I'm trying to learn and adjust at my old age here. This one was up nearly 5%. And after the consolidation, a 5% move in a stock like that, we'll take it every time. Hess is another one of these oil and gas international exploration stocks, and you can see it was trading tight within a base and then just broke out last week. So these ones will probably not be in our list this week. That's a 3% move, and we'll take 3%. OII is another one. This is field and services in that Tidewater group. And this one is still within the base. So that one is still, I think, actionable, but it was up nearly 8% last week. So these are, a lot of good winning trades considering that the indexes were down last week. Had a really good trading week. CEG, Constellation Energy. This one's got kind of like that shelf pattern that I was talking about, made a high at 185 and just kind of went sideways for a while. It's a volatile stock. Yeah, it went down and it went up, but eventually it went sideways and offered you a chance to get in there at that 185. And this one was up, 4.5% last week. That's, we'll take 4.5%. That's a good trade. And I mentioned Spotify. That was one of our winning stocks last week. It was up 17%. Meta was another winning trade, was up, nearly 9%. That's a big move for a big company like that. And then Hubs was another winning trade. It was up nearly 7%. All right, so that's it for me. Thank you for watching my weekly review, except for I lie. I have one more thing in honor of the great Steve Jobs, Shockwave. So like I mentioned, there was not a lot of news last week. And that we're kind of twisting in the wind here, waiting for earnings reports, waiting to hear from these CEOs and how business is doing. And the market's kind of trading on, interest rates and whatever the Fed heads are saying. And it's makes it real vulnerable. But Shockwave bought out by Johnson and Johnson. But like I said with Hubs, the move has already been made because there was rumors earlier, and Shockwave spiked on a rumor, spiked again on a rumor. And when the actual news came, it was just like, meh, the move had already been made. And that's why I say when you get that kind of chatter and that kind of talk and the stock spikes, it's unless another buyer comes in, it's and competes for, and starts raising the bids, it's kind of like the move has already been made. So that's why I mentioned that. A couple of other stocks of interest. People ask me to look at, this is medical generic drugs, Collegium Pharmaceuticals. I used to trade this one back in the day, but it did have a nice cup shaped pattern, and it spiked higher and had a little flat base consolidation, and now is moving higher with its moving averages. And you can see it's got earnings, and the earnings line's heading due north. So Collegium looks pretty good to me, surfing its moving averages. And the last one is Radiant. And this is a medical outpatient. The medical stocks with the news of Shockwave and that did help this sector here. And this is RadNet, RDNT, and broke out of a base, moving higher. Looks great. It's got some growth. And anyway, that's it for me. This time I'm not lying. I just wanted to point out one more time on the Nasdaq. It's just marking time, made a high there and then pulled back 3%. But at 16,000, it's just made a big move from 12.5 to 16. That's a big move going sideways, and it's a good thing the machines don't have memories, because they got a hold of the sell programs and then sold off. And then since it doesn't have memories, we got a little bit of a bounce on Friday, but still I'm a little cautious. I'm still bullish. I've been on green since early November, and I'm not going to budge from that. It's just I'm not all gas here. I'm just, you know, cruising and maybe tapping the brakes a little bit, being a little more cautious with my buys. Usually when the market gets choppy like this, your most recent buys will be your first sells because you get chopped up. And if you've got strong entry points from when the market, you know, made that follow through day on November 1, then it's a lot easier to hold when you have a cushion, you know, in something like NVDA. If you bought that what was this, the 500 buy point, you know, you bought a 500 and 880 and you know trades down, you know, 6 or 9%, you can hold, and it's down a couple of weeks after being up 11 weeks. So makes it a little easier. So entry points, and that's why I'm always trying it at MC stock charts to you know, just show stocks that are near buy points, and you get strong entry points and they run up. It makes it a lot easier to hold. And anyway, that's it for me. Thank you for watching. And at mcstockcharts.com, we never give up. You better not give up either.